Wall Street indices closed higher to begin an earnings-heavy week on a strong footing. Goldman Sachs, Bank of America, Morgan Stanley and tech heavyweights Tesla, Netflix and IBM will all be reporting quarterly numbers this week. Stocks in the Asia-Pacific opened mixed ahead of the release of China's quarterly GDP data. The SGX Nifty is indicating a low start for the Indian market. Crude corrects, prices fall about 2% as a stronger dollar and the likelihood of more rate hikes by Fed offset optimism over higher demand. CNBC-TV18 news break is confirmed. Invesco exits Z Entertainment as ARM OFI Global China Fund offloads a little over 5% stake for about 1,000 crore rupees. Buyers include Goldman Sachs and Morgan Stanley. Meanwhile, SBI's board will meet today to consider a $2 billion fundraise via unsecured notes. And Apple's first retail store in India will open its doors to shoppers in Mumbai later today, followed by an outlet in Delhi on the 20th of April. CEO Tim Cook is also in Mumbai for the store launch. A meeting with Minister of State for IT, Rajiv Chandrasekhar, is also on the cards to discuss India becoming a manufacturing and design hub for Apple. Good morning in the Mumbai News Centre. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines that we are tracking for you this Tuesday morning. A lot to catch up on. But first up, let's quickly take a look at what the Asian markets are doing currently. They are largely lower, and that is the kind of moves that we've been seeing in those markets yesterday as well. The US markets, they closed strong, and it is going to be a very heavy earnings week for the US markets. But for now, Taiwanese index is down 0.3%. We have Hang Seng, which is down around 0.5%. And if we take a look at the SGX Nifty as well, that'll come up for you on the screen after the sharp fall that we saw yesterday. But yes, after some recovery that took place in Bank Nifty, today again, SGX Nifty is indicating that the start for our own markets could be in the red. 30-point downtick is what this index is suggesting right now at 17,734. Moving on now, talking about the U.S. markets, Wall Street ended Monday's trading session. This is higher with the Dow Jones up 100 points, the S&P 500 gaining about 14 points and the Nasdaq Composite closing 34 points higher. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
Markets closing higher, the Dow up about 100 points, the S&P gaining about 1/3%, and the tech-heavy Nasdaq up just under 1/3%. Netflix lower today ahead of its quarterly earnings report tomorrow afternoon. Analysts are cautious on the streaming giants. Some saying the company has been too slow to crack down on password sharing here in the U.S., which hurts its subscriber numbers. Meanwhile, shares of Charles Schwab higher after posting better than expected earnings this morning. Despite today's gain, however, the brokerage firm has faced pressure since the collapse of Silicon Valley Bank, and its shares are down 35% over the past 2 months. And workers at Ben & Jerry's flagship Vermont store are filing for a union vote, putting the ice cream manufacturer's bona fides when it comes to progressiveness to the test. Ben & Jerry's once suing its parent company Unilever over a social justice issue. That's what's happening here in the U.S. Now back over to you in Mumbai.
Okay, that is the U.S. market action. Now, quickly just taking a look at the China data watch, where China Q1 GDP has risen 4.5%. This is versus an estimate of 4% growth. Ahead of this data, we were seeing some weakness in the Asian markets as well. So a reaction on that one will be important to watch. But yes, it is an important indicator that the Chinese GDP is higher than estimates. And yes, the reopening in China is having some impact, a positive impact, so to say, on the growth figures as well. Let's get back to U.S. markets and let's listen into some important opinion coming in from Alliance's Chief Economic Advisor, Mohammad Al-Aryan.
Core inflation was not weaker than expected at 5.6%, and that's the one to look at. And second, flying under the radar screen are survey measures of inflation. You had the New York Fed last week showing that inflation expectations for this year have gone up a full 0.5 percentage point. You had the Wall Street Journal this morning surveying economists. That's up 0.4 percentage points. So what you're getting is recognition that inflation is going to be sticky at around 4 to 5%. And that's what's been reflected in the 2-year that has traded back up to 4.14 and higher expectations of a 25 basis points hike at the beginning of May. if you look at how inflation has migrated from a few goods, food and energy, up to the whole goods complex, and now to the service complex, and we're starting to see it in wages. People should follow the Atlanta Fed wage tracker. That's up around 6%. So if you look at what has happened to the inflation dynamics, it's now embedded in the service sector, and it's starting to impact wages. And that's what happens when the Fed is late. That's what has happened in past episode, is that inflation goes from things that are interest rate sensitive to things that are less interest rate sensitive. You need to go higher and for longer, and therefore you incur two risks that we've talked about. One is to the real economy, and the other one to the financial system.
All right, that's the global market action. How will these cues impact our own markets? We have been seeing a lot of domestic cues weighing on our own markets, for instance, Infosys numbers. Let's get in our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Ekta, let me come across to you first up. What is the market setup looking like today?
Thanks for that. Well, yesterday was a day where the sensex and the Nifty snapped a 9-day gaining streak. Remember that we'd been on a strong run. We had seen weakness in yesterday's trading session on account of Infosys, as well as the spillover that we saw in the entire IT space. So the Nifty IT index fell around 5%, which was the biggest decline that we've seen in a year. Infosys slipped around up to 15% on an intraday basis to record what was the biggest fall that we've seen in more than 3 years. And we have the FIIs that net sold after multiple sessions of buys. So they net sold around 533 odd crores. DIIs net bought around 269 odd crores. So what seemed to happen is that, the bubble seemed to have burst in terms of the buying from the FII stable, as well as in terms of the market rally that we've seen. Let's see whether that was just a flash in the pan. In terms of the setup today, the US markets closed higher. There are earnings in focus, which you had alluded to. Asia's mixed. The China first quarter GDP was flashing on your screen, which came in at around 4.5%. Oil has dropped overnight on the account of a higher dollar, as well as interest rate concerns. So that should probably be a marginal positive for us. Overall, as of now, the SGX is indicating a bit of a softer start simply because of possibly the follow-on selling from yesterday, as well as the Asian markets being mixed at this point in time. But do watch out for a ray of hope coming in from the financials, because that seems to be really holding up with strength. Financials remain on a strong footing. The Nifty Bank was up for the 4th straight session. Earning reactions, Angel One, Just Dial, Quick Heal, lot of IT earnings to watch out for, which would be the likes of HCL Tech on the 20th of April. And other earnings this week, Reliance, ICICI Bank, Yes Bank, Lodha, MapMy India. So it would be heavy in terms of numbers, but remember that Reliance would be post-markets on Friday, ICICI Bank on Saturday.
Yes, big earnings lined up this week. Thank you so much for all those cues, Ekta. Let me talk about more stocks and get in Vivek, who's going to be talking all about the stocks to watch out for in today's trading session. Vivek?
Well, good morning. Quite a lot of stocks to keep on your radar. A lot of earnings that have come in. Also names of, some of the large block deals that happened in yesterday's trading session. So first, let's start off with Z Entertainment. Like we had highlighted yesterday, Oppenheimer has sold a little over 5.5% stake in the company. Now the buyers, there's a list of marquee names that have actually come in. So Morgan Stanley, Segante India Mauritius Fund, as well as Goldman Sachs have been the key buyers in this particular block deal. Also keep an eye out for 360 WAM, earlier known as IFL Wealth. Now what's actually happened is that Fidelity, that held almost a little over 2% stake in the company, has sold 1.4% in yesterday's trading session, and you saw the stock under significant pressure in the trading session yesterday. Also keep an eye out for Quick Heal Technologies. It's been a muted for the quarter for the company this time around, a loss of 6.6 crore versus profitability seen last time around of close to 28 crore. Revenues are down almost 52.5% on a year-on-year basis. Also, there has been a change as far as the management personnel is concerned. There is a new CFO that will be joining the company. Keep an eye out for Angel One. Angel One has delivered a good set of results this time around. Profitability is up almost 30% on a year-on-year basis. Revenues are higher by 21%. EBITDA up 30%, coming in at the 385 crore mark, and margins to have expanded over 300 basis points on a year-on-year basis. Just Dial, another steady quarter from the company this time around. Revenues up 40%. EBITDA coming in this time around at 14.4%. Keep an eye out for Jubilant Foodworks, some stake sale coming in as far as the subsidiary is concerned. BML2, the land asset division of the company, would get listed day after tomorrow.
Okay, important stocks there. Thank you, Vivek, for that list. Let me go across to Nigel, joining in with the cues from the FNO space. Hey, Nigel.
Well, morning, Sonal. Yesterday we ended lower, but it wasn't such a bad session. The headline index, that's the Nifty, ended lower because the tech stocks did decline. But otherwise, the mid-cap and the small-cap indices, they did pretty well on a day when you had large-cap IT stocks that were under pressure. In terms of the Nifty open as well, it was down mildly. But the FIs, after many sessions, close to around 6 sessions, they returned to their shorting ways. So the delta out there is around 8,000 contracts. They added 4,000 short contracts and they covered close to around 3,000 long contracts. So that's why I say the move is close to around that 8,000 contracts or thereabouts. They still continue to remain net short. Short positioning, though, is at around 63%. Remember, at the start of the series, it was at around 90% odd. In terms of the options data, well, they bought close to around 3 calls for every 2 puts. But they are also writing calls aggressively now. So that's telling you maybe at higher levels we'll like to see supply, or maybe we're bracing for a bit of a range which is capped on the upside itself, because they wrote close to around 3 calls for 2 puts. Now, what were they writing? 17,700 calls, 17,800 call. Between them, they added close to around 1.2 crore shares. So aggressive writing is what we're seeing out there. What's giving the bulls some hope is the 17,700 put. Well, that as well saw some open interest build up. Which brings us to the levels. As we mentioned yesterday, crucial support is at the 50 and the 200 DMA. Yesterday as well, we went closer to around 17,550 and we bounced off that. So that gives you the support zone. On the upside though, the 100 DMA, that becomes a bit of a resistance zone. If some way we can get up and moving on the Nifty first, pull up the Nifty 100 DMA, that should come up for you. And on the Nifty bank, the uptrend will remain intact till the 100 DMA can hold out. For starters, the HDFC Nifty is indicating a flattish to a mildly negative start. Let's see how things go from here. But the Nifty bank holds the key.
Oh, it does. Thank you so much, Nigel, Vivek and Ekta, for joining us and prepping us up for this trading day ahead. We'll slip into a break now. Up next, we'll get you all the cues from the commodities market. Stay tuned for that. Welcome back. You're still tuned into Power Breakfast. Let's talk about commodities now. Manisha Gupta is joining us with all the update. Manisha, what are you watching out for?
Hi, thank you for that. Well, I'm looking at the Chinese first quarter GDP numbers. 4.5% on an year-on-year basis is much better than the 4% estimated growth that the street was working with. So you have seen an immediate support come in for many of these commodities. The crude oil prices, which fell 2% overnight, the strong US dollar, while continues to weigh here, but the China GDP numbers coming in on the positive side is definitely supportive here. Remember, China is accounting for 40% of all demand growth in crude oil that we will see in this year. So any positive number that you see coming from China is going to be supportive. Ditto goes the case with the metal prices also, where we did see some profit taking on a higher level here, but on the lower side there is some opportunity buying coming back right into this one as well. So nickel prices are recovering from its 5-month lows. We already have seen prices gain up by 6% in the previous week. It also is near 1-month highs coming in for the copper prices now. Inventories on LME are the lowest since 2005 in any case, and the strong China GDP numbers is supportive across the sector.
All right. So that's the China factor and a lot of impact on commodities as well. Thank you, Manisha, for joining us and giving us all those details. We'll do one thing. We'll take another break for now. But up next, Apple is all set to launch its first India store in Mumbai later today. We'll get you the details you need to know on the other side. So stay tuned for that. Welcome back. Well, Apple is all set to open its first India retail store in Mumbai later today. The design of the Mumbai store is inspired by the roof art seen in Mumbai's iconic Kali Pili taxis, and store will open to shoppers at 11 a.m. today. Apple CEO Tim Cook too is in Mumbai for the store launch. In fact, my colleague Xenia Baria is outside the Mumbai store and she has with her some excited fans who have already queued up for the mega launch. Let's take a look.
How long have you been waiting here and how excited are you for the launch?
Oh, I've been waiting since 8 p.m. last evening along with him. And
It's been 12 hours.
Yeah, it's been 12 hours and super excited, super excited.
What are you expecting from the launch today?
Fantastic products, all the products in stocks. I'm planning to pick up a Apple Watch Ultra, so I hope to get the one that I want.
And all the colors as well.
Exactly. And then some more excitement with Tim Cook and Deidre being around. So yeah.
Do you think you're going to be able to meet Tim Cook today?
100%. I mean, first in line. I deserve that.
That's why we're standing in line for 12 hours.
We will get to meet him. We saw him yesterday, but yeah, of course, we will definitely be able to. We'll be able to see him for sure. That's for sure.
Okay, fine.
Yeah.
All right. And what about you? What are you waiting for? What do you look forward to?
I look forward to meeting Tim Cook, first of all. And then second of all, I am looking forward to buying an Apple polishing cloth. It's like a meme in the community.
All right. Okay. So as you can see, everyone here is really excited. Doors are about to open at around 11 a.m.
Okay, exciting times, and look at that queue, right? So long. In fact, Apple CEO Tim Cook is scheduled to meet Minister of State for IT Rajiv Chandrasekhar ahead of the Delhi store launch, which is on the 20th of April. The discussions are likely to focus on Apple's India plans. Tim Cook is likely to express confidence in India acting as a manufacturing design hub for Apple. He's also likely to share commitment for further expansion of made in India Apple products. So why is Apple hot on India? Ashmit Kumar explains.
Well, Cupertino, California to Mumbai can be a long flight, but by the look of things, Tim Cook is excited and charged ahead of India's retail store launch. This launch marks Apple's 25 years in India, but it is only in the last few years that we saw Apple really dialing in. Now, in the month of February, Apple chief referred to India as a hugely exciting market and a focus area for the company. So let's take a look at what has inspired this focus on India by Tim Cook. Now, Apple began production in India in 2017, usually with old iPhone models. But all of that has changed. Apple's Taiwanese contract manufacturers, Wistron, Foxconn and Pegatron have dug in their heels for the long haul and are going full throttle. So why is Apple looking at India now? Well, Apple woke up to the heavy dependence on China with the COVID lockdowns that severely impacted production as well as exports. Moreover, with geopolitical tensions adding to the wars, a need was felt by the Cupertino-based company to make the supply chains more resilient. India, moreover, proved to be a strong performer with stable production despite COVID. And finally, the cherry on the cake was the PLI scheme. India, now the most populous country in the world, proved to be a large market. 2022 alone saw sales of 7 million units. But the larger story is that of India as a manufacturing and exports hub. India posted unprecedented growth, recording electronics exports of $10 billion in FY23. Of this export figure, Apple's exports alone accounted for nearly half of it. Apple exported over $5 billion worth of goods, tripling its exports from FY22. Apple has become the first company ever to record exports of $5 billion from India. In comparison, Samsung posted exports of $3.5 to $4 billion for the same fiscal. Now, inspired by these recent successes, Apple now plans to triple production in the next 2 years. In fact, a recent report by JP Morgan indicated that Apple wants to shift manufacturing of 25% of all Apple products to India by 2025. Now, this intent is reflected in contract manufacturers like Foxconn doubling down on their investments. Foxconn is planning to pump in $500 million. It is also planning to quadruple its workforce in just the next 2 years. So, for 2023, expect Apple and its contract manufacturers to 1. Expand facilities, scale up production, increase the workforce, and also develop design and innovation hubs here in the country. But Apple's journey may still see some challenges. For one, India is still heavily reliant on China for importing key components to assemble phones. Moreover, of the 120 suppliers to Apple, only 12 are currently manufacturing in the country. India will also have to face challenges from countries like Vietnam that offer lower duties to attract investments. Meanwhile, the value addition in India is currently restricted to about 14 to 20%. And finally, the delays in payout of PLI incentives to companies may cause some discomfort. Apple, for now, is betting big on India in the China Plus One strategy. But India will need to remain on its toes to continue to grow as a manufacturing and exports hub.
Ashmit, thank you so much for that interesting analysis. That's all about Apple. Of course, we'll keep getting you all the updates as and when the store actually officially opens for sale. Exciting times for all the Apple fans. But let's move on now from this to the world of sports. Chennai Super Kings bested Royal Challengers Bangalore in a thrilling clash, although Dhoni's men had to endure an assault by Glenn Maxwell and Faf du Plessis after posting a massive total of 226. Bangalore lost Virat Kohli's wicket early in the chase and looked to falter, but a 126-run third wicket partnership got them back on track, only to fall short by 8 runs at the end. Remember, this could also be the very last time that Virat Kohli and MS Dhoni went head-to-head in the IPL. All right, that's from the world of sports. We'll quickly take a look at what's happening in the Asian markets before we take your leave on this edition of Power Breakfast. Mixed cues again. We have Hang Seng, which is down 50 points. Taiwanese index has recovered a tad bit. It's down around 16 points as we speak. US market ended with minor gains. We'll look at the SGX Nifty because that is the one which will indicate the open for our own markets, and that one is indicating a cut of 34 points. So let's see which way things go. We did see a recovery in Bank Nifty yesterday, leading to some recovery in Nifty, but still Nifty was low by 120 points. We'll take your leave on this edition of Power Breakfast. Stay tuned. All the market action on Bazaar Morning Call that comes up next.